Alright, so for today's video, what we're going to do is we're going to create an exponential slope. And what that slope will give us is a percent increase over the period of a year in the stock price. So once again, we're starting with a data set that's been downloaded from NASDAQ. I don't remember the name of the stock, so we're going to call it 26 for now. And how we're going to start this is initially we're going to select the close values, we're going to copy them, and we're going to paste them onto a new tab in our sheet. We're going to hit paste, and in this sheet, rows 2 and 3 are from the same date. You can tell it's the same data. So we're just going to delete row 2. And we're going to number each one of these. And one difference from my previous video is that we're going to maintain a header label. So that's a close. This is going to be number of days. This is going to be date. There. Now we're going to sort by the number of days from largest to smallest. And that's going to give us the excellent. So now we have the oldest value is at the top, and the date on those was July 11, 2008. And we're going to realign this back so that it's so that the days are now in sequential order. And once again, we're going to do the same thing. We're going to insert the year, and again we're calling a year as going to be 251 days. So we're going to say it equals the B column divided by 251, and we're going to continue that down. Alright, from here we're going to insert our chart. It's going to be a scatter plot. So we will select data. What I did is I right-clicked in the chart area to bring this panel up. Our X values is going to be the year. So we're going to let this go down to 4,000. That way, as we add any further data, it should automatically pick it up. And our price is going to be the Y value, so we're going to select that to 4,000. As you can see, our data looks a little weird here, so we're going to add our trend line. We'll make it exponential. So right now the stock seems to be losing money, but from here on, the stock is making a run. It's making a profit. So what we're going to do is we're going to delete everything that goes up until this point. And what we notice about this is that it's occurring approximately 7.6 years. So we're going to select this data, we're going to highlight it, and we're going to go all the way down to 7.6. Alright, now that we're here, we're going to look for roughly the lowest value. Well, we're looking for roughly the lowest value in price, which so far it looks like it's going to be 2.15. We can just scroll down a little bit and see if there's anything that's going to be a little bit lower than that. And no, it looks like 2.15 is going to be the lowest one. So we'll just highlight this and we'll head all the way up. Alright, and we're going to delete all those values. It should ask us if we want to shift cells up. Yes, we do. Okay, now let's return to the top and see what we've got here. All right, so as you can see, the chart looks a little bit crowded, but we're going to fix that when we change the date. So now that we're starting with day number 1, and the chart size is going to remain the same, so it's going to spread out a little bit when we select these. There we go, now it's much more visible. All right, so we're going to select the chart and we're going to double click on the trend line, and that gives us the opportunity to make the selections on our trend line, and we're going to display the equation on the chart, which is now 3.9928 times e to the 0.5707 times x. All right, so we're going to insert a new column here in D, and we're going to call this expected price. So we're just going to label it $prime. And so in this case, it's going to equal 3.9928 times e, and this is going to be a function value in the Excel sheet. So exponent to 0.5707 times x, which in our case is the year. All right. Now, one thing I like to do to keep this a little bit more clean is I'm going to head up here and I'm going to ask Excel to move it over a little bit. And then these columns are a little bit easier to read, and it makes sense because now it's in the form of dollars and pennies. Now, the actual equation for a ratio is going to be an initial value x times 1 plus your rate r raised to the power of your time. And so if you wanted to find out what your actual rate, this r is your percentage. So if you wanted to find out what it actually was, we've got our initial value of 4 would be your initial 0 value, or you would just have to set this equation here equal to this equation, and that would allow you to solve for r. So it would be just a simple matter of the x would be your initial value at time where t equals 0. So if you do want to find out what your actual rate is, you can solve for that equation there. But for our purposes, since we're just comparing stocks to each other, we're just going to stick with this 0.5707 value, and we're going to call that K. So we don't need this. But like I said, if you do want to know what the rate is, that's how you would solve for it. All right, and this is going to be their percent, and this column is going to tell us the percent value. So $4 is what the stock should be worth at this point. $2.15 is what it is worth. So we're going to say what percentage is that. So we're going to label that equals 215 divided by 4. All right, we're going to push that down. Next, we're going to multiply by 100 to make it a percentage. There we go, that looks better. All right, now once again, we're going to use our data analysis tool. So we'll go to data analysis, descriptive statistics. We're going to go for column E, which is the percentage. That's what we want, from 1 to 4,000. That way, as we add on more numbers, it'll still be good. And if you haven't started this yet, summary statistics won't be selected. You'll want to select that. Hit OK. I'm used to having not having the column the columns labeled, so I had included a 1 there. Alright, so it's fixed. We change it to 2. There's our descriptive statistics. So we're going to copy this column, we're going to bring it back into our page, and paste it there. We're going to move the chart a little out of the way, that way we can see it. We no longer need this tab, so we're going to delete it. Alright. And this is how we're going to, this is the exponential method for solving the stock. So now, as you can see, we can scroll down to the most recent day. It should be in the 600s, I believe. There it is. And from here we can see that the current stock is currently valued at 77% of what it should be valued. So when it's selling at $12.65 and it should be $16.39, it's a relatively good price to buy right now. And so this is what we're getting at here, trying to find out how much the stock is worth. Right. So there is one more video coming up where we're going to talk about using the percentage and turning that into a sine wave. So the theory is that as the stock is going to move up and down, above and below the 100%, and trying to figure out how frequently it will go above and below and how far. So we're going to find the amplitude and frequency, where it's going to be the key factors that we're going in next time.